Okay. Uh, Welcome to this training. I hope I'm very audible. Right. This is Trading Dumb here. So I will be taking you through how I trade personally, and it is the simplest and most effective way of trading you've ever seen. Right. So before I get through to the thick of uh the matter, I would like you to cut all distractions because what I'm about to show you is so simple that when we get through it, you might not even believe the strategy works. It is I'm not the type that will, try to sell you dreams or whatnot. This strategy, I can guarantee you, if you follow, if you are your, it is just so simple that yeah, all it depends on is your ability to follow simple instruction. All of those, I know a lot of things you've been taught from where you learned how to trade and everything, and a lot of traders have made trading so complicated. I don't have, I'm not the type that likes to talk about other people's work, but one thing I can guarantee you here is I will make it so simple, so direct, so very effective that once you can follow simple instruction, you will begin to see your trading results go from inconsistent to getting at least 60 to 70% win rates. You will take losses, that one is guaranteed. You will take losses, but you will see consistent profitability in your trading. So now let's get to the thick of the matter. One thing is that I want to make this training, okay, as simple as possible, right? So in trading, there are two things basically you need. I'm trying to before we get on the chart, there are two things basically that you need. Number one is bias. Is bias. Then number two is entry. Entry, right? This is all you need in terms of trading. Forget about what any other persons have taught you. Forget about higher highs, lower low, other blocks, fair value gaps, and all of those things. Trading is so simple and yet complicated by many traders. Everything you need is just basically bias. How do you build bias? When you open a chart, how can you easily build bias, right? So I'm going to be showing you how to easily build bias in less than 30 seconds. At most 1 minute, you already know where you are going in terms of a pair. You already know this is how this pair will move for the week, for the month, for the day. Simple, straightforward how to build bias in 30 minutes, in 30 seconds at most, that you don't really, we learn at different pace, right? We all learn at different pace. So even though you are a slow learner, at most, I expect you 1 minute, you already learn how to build bias. Then, so once I talk about how to build bias, then the next thing is entry. That's all. Once you know the direction of the market, once you know the direction of the pair, the next thing is how do you get in? Where do you get in and where do you get out? That's all. How do you get in? When do you get in? When do you get in? And how do you get out? Entry, exit, time. When will I get in? How do I get in? What do I need to see for me to get in? And where do I take profit? That's all. The first thing is bias, directional bias. And then the following thing is entry and exit. Simple, straightforward. Once you know these two things, that's all you need about trading. Understand? It's not that very complicated, right? So let's start with bias. Once we start with bias, then the next thing is I will now talk about entry. So now in bias, right? There's something the way I trade. In bias, you need what we call key levels, right? In bias, you need key level, KL. Now, key levels. Now, key levels, what are key levels now? So because I will need you to have a pen, a jotter. You might not get access to this video out of this aside today, aside this moment that you are lucky to come across this. I don't know. You might not come across it anymore. So take advantage of it. Cut all distractions. Get your pen, get your jotter, everything I'm going to be sharing with you, straightforward. You know, you will need to jot. You will need to jot, right? So in terms of bias, what you need is key levels. What is key level or what are key levels? People call it, some people call it support, some people call it resistance, but I call it key levels. And then key levels are basically decision points. Key levels are decision points. What do I mean by decision points? Decision points are where markets intend to start a trend or end a trend, right? Market wants to start a trend or end a trend. Do I need a notepad so that, like I said, no, okay, no need for notepad. So, like I said, key levels, right? Some people call it support, some people call it resistance. But I say either support, either resistance, it doesn't matter. What I'm trying to teach you is logic. What you need is logic. What does this thing, what do we use it for? You don't really need the English. You don't need the grammar. You need to understand the logic behind the trading. You don't need the grammar. You don't need to know the meaning of support and resistance too much. All you just need is what do we need this for? So, like I said, key levels are decision point. We use it to start a trend and we use it to end a trend. That is, if a market wants to buy, they start from a key level. And that buy, once a buy wants to start, they start from a key level. You see this point right here, it will be a key level. This starting point will be a key level. And now, if they want to end this buy, they are going to end it in another key level. This will be another key level, right? So if you are taking a trade, so what we do with key levels are we buy from a key level and then we exit from a key level. But that I will talk about exit later, like I said. So you start expecting drops from another key level. But the most important thing at the moment is not to cram it. It is for you to understand what do we do with key levels and what are key levels. Like I said, key levels are decision points. So key levels are where we use it to start a trend, we use it to end a trend, and third is we can use it to continue a trend. It is not every time market gets to a key level that they end a trend. You can have another scenario like this when they start a trend like this. Like I said, it is a decision point. Once they get here, they can break this key level and then they use it to continue the trend. You understand? So the most important thing is key levels are used to start a trend, they are used to end a trend, and then they are also used to continue the trend. That is in this particular situation is what some traders will call breakout and retest. Some traders call it breakout and retest. But you know, the logic is what you need to know. So now, in terms of building bias, like I said, you need to understand and be able to spot clearly key levels on the chart, right? So after that, the next thing is there are three types of key levels. There are three types of key levels that we have. One is the A-shaped key level. We have a A-shaped key level right here. We have another one that we call a V-shaped key level right here. This is how it looks like, A-shape and V-shape. I will show you, I will get on the chart, don't worry. I will show you everything on the chart. Like I said, how to build bias in less than 30 seconds. You already know how to build bias. That's one of the things I'm going to show you briefly, but you need to first understand how we do it. So now key levels, right? We have three types. The A shape, like I said, this is an A shape key level. It will always have something like an A, like A, right? A shape. Then the V shape key level, this is it. Then the third one, which is an open close key level, but for the sake of time, I don't want this meeting to go too long. So right, so I will only be talking about the A shape and the V shape key levels, and I will be backtesting it. I will take some trade live with you. I'll be backtesting it so you see it. So that's it about key level. So now, so let me bias and entry. So let me just delete everything. Let me delete everything. Now we are talking about key levels at the moment. So now, like I said, A shape and V shape key levels. So what do we use key levels for? We use A shape key levels to look for selling opportunities. And then we use V shape key levels to look for buying opportunities. When you want to go long, we look for, we use A shape to buy, we use A shape to sell, and then we use V shape to sell. We use V shape to buy, we use A shape key levels to look for selling opportunities. And then there are situations whereby when an A shape key level, if it gets disrespected, if you have something like this, an A shape key level that gets disrespected, let's say this is a candle that moves up and breaks this key level to the upside like this. What do you expect is that, like I said, key levels are decision points whereby we can use it to start a trend and end a trend. But in situations like this, like I said, we use A-shaped key levels to look for selling opportunities. Now, once you get disrespected to the upside like this, then you use it for selling opportunities. You expect markets to come back into the A-shaped key level, and then you look for buys. That is continuation setup. We'll talk about that in entries. But for now, the most important thing you need to understand is A-shaped key levels are used for selling opportunities. And once they get disrespected like this, in this situation, you expect markets to come back into it, and then we use it to buy. So V-shaped key levels, like I said, V-shaped key levels are, if this is a key level, this is a V-shaped key level right here, it gets disrespected with a body, we are supposed to use it to buy. Let's say we have a strong candle, an impulsive candle that disrespected it. Instead of them to, respect the key level at this point and use it to buy, they disrespected it to the downside, right? So the next thing is you start using the same V-shaped key level. You use it for selling opportunities. So you expect markets to come back into that V-shape, and then it will continue to short, continue to sell the market. So that's it. The key point right here, like I said, we have three: A shape, V shape, and then the open close. So I will not be going into details of the open close here. Yeah, but for now, just A shape and V shape key levels and how and what they are being used for. Like I said, this is building bias, basically. This is building bias. So once you see, so what do you want to see basically on the A shape and V shape key level now? So what do you want to see on your key levels, right? So let's say this is a key level. You need candle closure and candle rejection. Let me write it down. Once you have bias, I will call it B, bias. What do you want to see on your bias? You want to see key levels, which is KL. So there are two types of key levels, like I said, which is A shape and V shape. So what do you want to see around your key levels? You want to see candle rejection and then candle closure. How candle rejects and candle close around your key level is all you want to see. Now, let's take a look at this line, right? I will get on the chart. Don't worry, at the moment, everything can look so confusing, but once we get on the chart, you will see how simple it is. Like I said, in 30 seconds, you'll be able to be biased. So on the key level, right? Like I said, you want to wait for candle rejection and candle closure. Let's say this is an A-shaped key level right here. This is an A-shaped key level. This is an A-shaped key level. What do you want to see on A-shaped key level? Like I said, you want to see candle rejection. This is what we want to see, candle rejection. You want market to trade into this key level and they start rejecting. And then once they reject, you want to see something like this, a candle closure. This is all you need to build bias. Like I said, key levels are what? Decision points. They are used to start a trend and they are used to end a trend. And also we use it to continue a trend. So once you see this is your A-shaped key level, like I said, A-shaped key levels are used for what? Set to look for selling opportunities. So now A-shaped key level, right? Market has traded into it and it has rejected. What does that tell you? Like I said, you want to look for candle rejection and candle closure. You can see the rejection. We've rejected this candle and then we closed below. This is the candle closure here. The close of the candle. This guy here is the close of this candle. This is the candle rejection. This is the candle rejection out. So you want to see candle rejection and candle closure on your A-shaped key level. What this is telling you is that a sell is about to begin. A sell is about to begin. But before we go into that, I will also give you time frames that you need to look out for all of these things. But let me show you some examples of where A-shaped key levels. Okay, let me also talk about V-shaped key levels. Then I will then show you examples on the chart. So, like I said, if a selling opportunity wants to start, this is what you should expect. This is what you want to see on the chart. I will tell you, like I said, the time frame you should look out for. The time frame you should look out for. Right? So candle rejection and candle closure. This is all you want to see, right? So when it comes to looking for selling opportunities, then when it comes to buying opportunities, let me delete candle rejection, candle closures. So now, for V-shaped key level, if you want to look for longs, if you want to look for buying opportunities, right? This is a V-shaped key level. Or do you want to say, like I said, you want to wait for candle rejection, you want market to trade into it, and then they reject. You want them to trade into it, and then you want to see candle rejection like this. You want them to reject. This is all you need to build bias. So candle rejection of a key level and then candle closure. You want the market to close above the key level. You want market to close above the key level. Once you have this, you want to start looking for buying opportunities. You want to start looking for longs. You want to start looking for longs. But on the charts, this is just basically all you need to build bias, right? All you need is your key level, the V shape, and then the A shape. Then you need a candle rejection and candle closure. So let's get on the chart and show you examples of where market got into some key levels and they start to reject. Okay. I'll show you where markets start to reject from an A-shaped key level. This is one here. Look at this rejection. Look at this sell. This entire sell to the downside. Where did it come from? You will see. You might not be able to spot it now at the moment, but look at. Okay, let me delete this guy so you can see it very well. You can see the sell. You can see the drop. This strategy works everywhere. You can see the drop. Look at the A-shaped key level, like I said. Look at this sign here. This is an A. If you don't want to take this guy, look at this clear A-shaped key level right here. And when market traded into it, they traded into it around this zone. And look at this drop. Look at how they drop. Right? Can you see this example? Let me turn on the candlestick. Can you see the candle rejection? They traded into it and then they dropped. Look at the sell, right? So again, let me turn on the line chart for you so that you can see it clearly. That is an A-shaped key level right here. This is an A-shaped key level right here. This is also a small A-shaped key level. Either it is small, either it is big, as long as it gives you an A-shaped key level. A-shape is an A-shape regardless of the size. Understand? So look at how they drop here. So let's get on more examples. I will show you how to spot it without. Okay, look at this current market that we are. Where did this buys? Where did this buys? Where did they came from? Look at how we've been bullish on Eagle USD. Look at how we've been buying for how many weeks? 1, 2, 3, 4, 5, 6, 7, 8, 9. For the past 9 weeks, look at how Euro USD have been buying. So where did they come from? What did I talk about? I said A-shaped key levels. You use A-shape to buy and you use V-shaped key levels to sell. Right? Look at this key level right here. Look at the candle rejection. Look at how they rejected the candle right here. This is the key level. Let me turn on the line chart so that you can see it clearly. What this? I want. Okay, now it is better. Look at this V. Look at the V shape right here. You can see this V shape. So, okay, please give me some minutes. I have a call at the door. I'll be back briefly. Just give me some minutes. Okay, sorry, I had to attend to someone briefly at the door. Right, look at this V-shaped key level. You can see when market got there. Look at how they started to buy again. These things are not very difficult to. They are not very difficult to spot. I will show you how to spot them, but basically you will. They are not difficult, but I will show you how to spot them briefly. Uh, like I said, look at the buys. This thing works on all strategies, regardless of the pair. If you trade gold, if you trade Euro USD, NAS 100, you can see the rejection right here. You can see the nice rejection, like I said, candle rejection and candle closure. They traded into it this particular week. You can see they traded into the V shape. This is the V shape key level right here. Again, let me turn on. You can see the moment they traded into it, they just started to what? They just start to buy. They start to buy. So if you were to come into this week, like I said, all you need is candle rejection and candle closure around a key level. If you were to build a bias this particular week, you could have been looking for buying opportunities. Once the candle closure, like I said, the rejection of a key level and then the candle closure. If you were to come into this new week, all you just need to be looking for is how to buy. It is very simple. A V-shaped key level that got disrespected to the upside, a V-shaped key level, the market trading to it, and then they start to buy. So that's all you need about key levels. You can see that it is very, very simple how to build bias. Let me show you more examples on Euro USD. It works, like I said, it works on all time frame. But how do you spot a key level? A key level is basically a buy and sell candle where they are open. It's just basically a buy and sell candle that forms a resistance. This is a V-shaped key level right here. Let me just show you examples. This is a V-shaped key level right here. This guy here is another V-shape. Like I said, a buy and sell candle that has their open and close candle on the same pricing. Look at this guy right here. Look at this low right here. This is a V-shaped key level. This guy right here is an A-shaped key level. This guy right here is an A-shaped key level. If you turn on the line chart, you will see it. You can see V-shape, 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 A-shape, A-shape. All of this can be used as to look for selling opportunities and buying opportunities. But what I said, you want to look for the one that got rejected. You need the one that got rejected. You understand? So if you turn on the candles again, this is the one that got rejected right here. All of these ones, there was no candle rejection. So it is very simple. Let me show more examples. Let me show more examples. Let's see more examples. Let's see more examples of an A-shape and V-shape key levels that got differentiated, that was used for buying and selling opportunities. Okay, I think we've talked about this particular example. It is everywhere. This is on the weekly, right? Now, let's see the daily time frame. This is also the daily time frame, just to show you that this thing works everywhere. This thing works everywhere. Okay, this was the one we test. I want to show you. Okay, look at these cells. Look at all of these cells right here. Look at all of these cells right here. Look at this cell. Look at how they continue to sell for how many days. They continue to drop to the downside, right? Where did this cell come from? Like I said, candle rejection and then candle closure. That's all you want to see around the key level. Candle rejection and candle closure around the key level. So by the time you turn on, you can see the A-shaped key level right here. That is the A-shaped key level that got rejected. They rejected from this key level, and you can see the drop. You can see the drop. Like I said, it is very simple. If you are to trade in this particular day, or once you see this key level right here that got rejected, it is very simple, very straightforward. You can see the rejection around the zone. It got rejected, and then they traded below it. You can see the drop. They just continue to push. The market just continue to push to the downside. We have, like I said, the third one, but I will not really be talking about that one. We really don't need it. Now again, look at how, like I said that key levels are used to start a direction, and then we use it to end the direction. By the time they sold up to this point, they started buying. Where did all of these buys came from? Look at again, like I said, a V-shaped key level. You need a V-shaped key level for what? For buying opportunities. Look at this V-shaped key level right here. Look at this V-shaped key level right here. You might not be able to spot it with your bare eyes because this is probably your first time you are seeing it. You can see the rejection, right? This is a V-shaped key level right here. And like I said, the move started from this zone. And then by the time they got here, this V-shaped key level, they rejected it. Look at how they continued. Look at how market continued to push to the upside. By the time I turn on, you can see the V-shaped key level that got rejected right here. Very, very obvious and very simple. Like I said, you don't even need up to 30 seconds for you to know how to build the bias. It is very, very simple, straightforward. Once you come onto the chart, what do you want to see? A V-shaped key level that market trading to it. Once they trade into it and then they reject, and you know what, you start looking for the next thing is entries. You start looking for buying opportunities. That's all. So that is all in terms of building bias. I hope that is very, very simple. For avoidance of doubt, let us take one more example on gold, so that you don't think, okay, this thing, does it even work on gold? Does it work on gold? Let's get on gold so you can see how to build bias. Basically, this is just basically how to build bias. Let's start from the weekly. Let's start from the weekly, and I'll show you some examples. Look at these buys. All of these buys, where did they start from? Look at this origin here. Like I said, V-shaped key levels are what? They are used for buying opportunities. We use V-shaped key level to look for buying opportunities. So look at these buys right here. Like I said, candle rejection, candle closure around the key level. Candle rejection. You can see this is the V-shaped key level right here. This is the V-shaped key level right here. This is the candle rejection. This is like the first week, second week, the third week. This is the third week they traded into it, and then they rejected it. they rejected that key level. So let me turn on the line chart so that you can see it clearly. You can see where the buys came from. All of these buys on gold. You can see where they rejected and where the move, where it started from. So that's just for avoidance of doubt. Maybe you are thinking, does it work on features? Anything you want to trade, it works on it perfectly. Right? You can see the V-shaped key level right here that got disrespected, that got they rejected from it, and then they start to push to the upside. So let's go on daily. Let's assume, so for that week, right? For that week, if you were to come in on this third week, let's say this is week one. You saw this week that they rejected last week. Coming into this week, all you could have been looking for is how to buy gold. But some people will not know. You know, they've been taught that trading is higher high, higher low, higher low. All of these things, you don't need it. You don't need it to build bias. You don't need it at all. All you just need is key levels, rejection, and candle closure. Key levels, candle rejection, candle closure. You don't, like I said, you don't even need to cram it. All you just need is how to spot it on the charts. If it takes time for you to be able to spot it with your bare eyes. I've been doing this for a long time, so I don't need the line chart. But for you, if you don't know, you can always turn on the line chart. The moment you turn on the line chart, you will see it. This is an A-shaped key level right here. I just want to show you an example. This is an A-shaped key level right here. This is a V-shaped key level right here. This is a V-shaped key level right here. This is an A-shaped key level right here. So it is all on the chart. All you just need is ability to spot it. And what do you want to see around the key level? You want to see candle rejections and candle closure. So let me take a few more examples on gold, and then we move to entries, and then I backtest it for you. So let's delete everything. If you are a day trader and you want to trade gold, let's say you come into the chart on this particular day, look at this key level right here, sitting pretty. Can you see how they traded into it? I'll zoom in. Okay, yeah. Like I said, V-shaped key levels, you use it to look for buying opportunities. Look at the candle rejection and candle closure around this V-shaped key level. This is the V-shaped key level. By the time I turn on the line chart, it becomes very, very clear. You can see the rejection. You can see the V-shaped key level. This is the V-shaped key level right here. And then this is, like I said, candle rejection and candle closure. So by the time I turn on this chart, you can see how they continue to work, how to continue to push to the upside. They just continue to push to the upside. So like I said, you don't need higher highs, higher low. You don't need all of that to look to build bias. It is very, very simple, very, very straightforward. If you are on the chart that day, the moment you see this rejection, you just want to look for buying opportunities. They are there. They are on 4 hours. They are on 1 hour candle rejection, candle closures around a key level. So then the next thing is your entries. How do you take entries? So now let's put. So let me put everything together. How to trade it properly. Let me put it together. How to trade. All you need is what? Structural liquidity, and then you need key levels. Like I said, so you subject everything to key levels. So let's put everything together. The first thing is stop trading lower time frames. Lower time frames will not let you be very, very consistent in terms of profitability. You only need these five, what is it called? You need your monthly, weekly, daily, 4 hour, and 1 hour time frame. We use monthly, weekly, and daily time frames to build bias. What we want to see around our key levels, around our on our time frames is candle rejections and candle closures on maybe the weekly. If you are day trading, on day trading, right, you want to see market reject a key level on a particular day on the daily time frame, and then you start looking for buying opportunities. So like I said, I want to go into the full strategy now, but let me quickly recap. Market starts from one key level, and then it ends on another key level. If they are coming from, let's say, this A-shaped key level, if they are coming from it, they rejected, you expect them to end. So you can use key levels to as a exit, as a take profit point. So, but let's get into the chart. So let's get fully into it so that you will really understand everything in full glare. So how do you build bias? Is this what do you want to see is you, like I said, weekly, daily, 4 hour, 1 hour time frame. That's what you need. And then the monthly, don't trade lower time frame. If you won't be consistently profitable. Like I said, this idea is to make you consistently profitable, not you take a trade today, you win, and then the next 3, 4, 5 trades, you give your profits back to the market. So I will backtest it. Don't worry, I will backtest it. I hope I've not spent too much time. I just like to make everything very simple. So what do you want to see coming into a new week? Coming into a new week, let's partition. I need this vertical line. 1, 2, 3, then 4. Now let's call the first one your weekly time frame. This is your weekly. This is your daily time frame. This is your 4 hour. Like I said, this is all the time frame you need. And then this is our last result. That's 1 hour time frame. That is all you need to trade profitably. So now let's say you're coming into the new week. Like like I said, what do you need? You want to start on the weekly time frame. What you want to see on the weekly time frame is this. A rejection of a key level, a candle rejection of a key level, and a candle what? Closure. Now, a candle rejection of a key level of an A-shaped key level and a candle closure below on daily time frame, what you will see on the 4 hour on the daily time frame is a liquidity sweep and a break of structure. This is what you want to see. It will give you a liquidity sweep and a break of structure. Some people call this Quasimodo, some people call it QMR, but it doesn't matter. All you want to see is a weekly rejection of a key level. Weekly reject weekly, daily must give you a liquidity sweep and a break of structure. This is the break of structure right here. If you don't get this on the daily, then if you get this on the daily, the next thing you want to see on the 4 hour is a 4 hour breakout. Once you have this 4 hour breakout, then the next thing is you want to take entries on 1 hour or the 4 hour. So let me go over it again, how to beat bias and then how to take entries. Coming into a new week, you want to see a rejection of a key level, right? An A-shaped key level that got rejected and then candle closed, right? Then you move one time from lower to the daily. On the daily, you want to see a liquidity sweep and what? a liquidity sweep and a break of structure to the downside. Some people call it QMR. Then on 4 hour, you want to see a breakout. So if you see a rejection of a key level on the weekly and it doesn't give you a QMR, the next thing you want to see is a breakout. It will give you one of these two. If you don't get a QMR, that is liquidity sweep and break of structure, you want to see a breakout to the downside. This breakout to the downside on daily, by the time you move one time from lower to the 4 hour, you get a liquidity sweep and a break of structure. It is still basically the same thing. These two, it still basically works the same thing. And then you use your 1 hour time frame to look for entry. So again, like I said, once you want to build bias, you start from the weekly. That's on the weekly. If you're coming into the week, that's maybe on a Sunday, right? You want to look what did the last week, what did we do on the last week? That's a rejection of a key level, and then you move one time from lower to the daily. What do you want to see on the daily? A liquidity sweep and a break of structure. Once you see a liquidity sweep and a break of structure on the daily time frame, then you want to look for selling opportunities. You want to look for selling opportunities on 4 hour and 1 hour, right? 4 hour, once you see liquidity sweep and break of structure, you want to see the most recent breakout. Your most recent breakout will be on the 4 hour, and then you want to look for selling opportunities on 4 hour or 1 hour. Then if you don't see, like I said, if you see weekly reject weekly, Daily did not give you sweep and break. This sweep and break, liquidity sweep and break of structure. You want to see this breakout, this guy right here. You want to see this breakout. If you see a breakout on the daily, it will give you a liquidity sweep and break of structure on the 4 hour. Once you see this, then you want to start looking for selling opportunities and entries on 1 hour. I hope this is very, very clear. We've gone through the examples. Let me delete everything and, let me delete everything and show us in insights how it works on the charts and how, let's see, let's do Euro USD again. I'll backtest it, like I said. If you now let's start it properly and see, like I said, I will backtest it, but coming into this week, like I said, if you are to trade this particular week, I said you want to look for a rejection of a key level right here. You understand? This is the weekly time frame. Well, the next thing you want to do is move one time frame lower for the daily time frame. What do you want to see? I said you should see a rejection on the weekly should give you a liquidity sweep and a break of structure. Yeah, you might be thinking, because if you want to buy, this is what you will see. If you want to sell, this is how it will look like. It is more like an M. Some people call it QM sweep and break. It doesn't matter. And so then you want to see either a QM sweep and break or a breakout. A breakout is more like a V shape. Right? So let's go to the daily. If you look at the daily, if you turn on the line chart, don't forget this is the weekly rejection. This circle right here is the weekly rejection. If you turn on the line chart, I said a weekly rejection will give you a liquidity sweep and a break of structure to the upside. If you turn on the line chart, what do you see? Just look at so simple, so straightforward, and so direct. Look at this structure right here. 1, 2, 3, 4. Can you see it is the same thing with what I drew here? You can see the liquidity sweep. Oh, this guy. You can see the liquidity sweep right here and the what and the break of structure. And afterwards, market was just continued to pull up. You can see. Let me delete everything and show you. Let's so it is very, 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 very simple. You don't even have to cram anything. Let me talk about the one of the buying opportunities so that it doesn't feel like I did it doesn't look like I did example on how to look for sell. I didn't talk about how to buy, right? All going through this. Yeah. Okay. So if this is your weekly time frame again, I just want to briefly go over it. This is your weekly, this is your daily, this is your 4 hour, and then this is your 1 hour time frame. What do you want to see around the key level? This is what you want to see around your key level. If this is a key level, weekly key level, you want to see weekly reject weekly. You want to see weekly reject weekly and candle closure above, weekly reject weekly and the close above. On the daily, like I said, you want to see it should give you a liquidity sweep and a break of structure, something like this. Let me delete it and use no. Let me use this guy. This is what it will look like. This is what you will see. If you don't see this, this is liquidity sweep and break. You will see just a breakout. You will see a breakout, something like this, your most recent breakout. So then once you come to the 4 hour, if you see liquidity sweep and break of structure on the daily, what you will see on the 4 hour will be a simple breakout. You will see a breakout. If you don't see, if on the daily, after weekly reject weekly, the daily gives you a breakout, what you will see on the 4 hour time frame is liquidity sweep and what? A liquidity sweep and a break of structure. This is all you need to build a bias. This is all then you use your 1 hour time frame to look for entries and then you take it up from there. So this is all you need. It is still the same thing with how to look for selling opportunities. Weekly reject weekly, daily give a sweep and break, liquidity sweep and break, and then 4-hour what gave us a breakout, and then we just look for buying opportunities. So I hope that is very, very clear. It's still the same thing when you're looking for, when you want to look for sales, you look for selling opportunities, you need weekly reject weekly on the weekly time frame. You move one time frame lower, which is the daily. You want to see a sweep and break to the downside, which would be something like this. If you are looking for selling opportunities, it will be something like this, right? It will be like an M. It will look like an M to the downside. Then in this sweep and break on 4-hour, it will give you a breakout. On 4-hour, you will get a breakout. So let me delete everything. Like I said, look at this example again, one more time. Look at this daily. Let's even look at this weekly rejection. Like I said, weekly reject weekly. Weekly reject weekly right here. They rejected this V-shaped level. If you turn on the line charts, you can see the rejection. You can see the V-shaped level they rejected. This guy right here. Turn on the line charts. You can see it. Weekly reject weekly. Close above. Like I said, candle rejection and candle closure. Once you see something like this on a weekly time frame, for the rest of that week, all you want to keep looking for is what? Is buying opportunities. Is buying opportunities. So the next thing is, of course, you can buy on the weekly time frame. You want to ensure that the weekly and the daily are in alignment. The weekly and the daily are in alignment. What do you want to see? A liquidity sweep and a break. You turn on the line chart, you can see it very, very simple, very clear. Liquidity sweep, you can see it, a liquidity sweep right here and a break. And then market, then the next thing is you want to come to a 4-hour time frame. So where is it? Okay. A liquidity sweep and a break. If you then look at it, like I told you, a liquidity sweep and a break on the daily will give you a breakout on the 4-hour. So look at the breakout, your most recent breakout. Look at the breakout here. Let me delete everything and show you the breakout where you could have gotten an entry. You want to wait for your most, like I said, breakout is just a V shape. Then you will look for a breakout, market taps, and then you get in. That's just a look at the V shape right here. Look at your breakout. So this is higher high, higher low, higher high, higher low. Then market broke structure here. And what did they do? They came back straight into it and they continue to buy. That is your entry. But I will show you briefly. Let's just mark out our breakout right here and see what happens. If you turn on the line chart, can you see where they came back into? Can you see where market came back into? Very simple. It's almost zero drawdown. Can you see the entry? Can you see the entry? I will backtest it. I'll backtest it, but I'm still trying to show you right from here. We already have what's it called, 10-hour out with just 16 pips. 50. I use 15, between 15 to 10 pips stop loss with just 13 pips stop loss. This is 15 pips stop loss right here. You can see it. You can see the break, and then market was came back into it, and they continue to push to the upside. Very simple, very straightforward, and very, very direct. So that is it about how to build buyers and then how to get in on entries. So let me talk basically. Let me talk on entries. Let me talk about entries, and then I do the back testing. So once you have your weekly reject weekly, let's say you have your weekly reject weekly, then daily gave you the sweep and break. Now you want to look for what? Buying opportunities on 1 hour and 4 hours. Like I said, you want to look for your most recent breakout. Most recent breakout on the 4-hour, you expect markets to come back into it, and then you use that to buy. You use it to buy, and then you go. So if you are trading daily, if you want to trade from, let's say it is on a Tuesday or Wednesday, you want to get on a trade, you don't need the weekly time frame. You will start your buyouts on what? Daily reject daily. Then you go one time frame lower to what? The 4-hour. On the 4-hour, you want to see a sweep and break. Once you see a sweep and break, you move one time frame lower to 1 hour. On the 1 hour, you want to see your most recent breakout. Once you see your most recent breakout on 1 hour, you use it. You expect markets to come back into it. and then you use it to buy. You understand? Yeah, don't forget when I started the trading, I told you that an A-shaped key level is used for buying. An A-shaped key level, if you have an A-shaped key level, we use it to what? To look for selling opportunities. But once market trades and disrespect it, like I said, if market trades above it, like this, if market trades above it, what do you expect? You will use it to what? Then look for buying opportunities. I will show you. You expect markets to come into it and then they move. So if I turn on, like I said, look at the buys here. Look at these buys, all of these buys. Where did they come from? They came from, all of these buys came from this A-shaped key level that got disrespected. This candle right here, this candle right here broke it to the upside, and what market came back into it, and then we pushed to the upside. Turn on the line chart so you can see it clearly. You can see it, the A-shaped key level that got disrespected. Market came back into it. You can see market came back straight into it, taps, and then it melts. We just continue to push to the outside. Now, another example right here is I want to show you. This one, we call it continuation setup. Like I said, any A-shaped key level that got disrespected to the upside with a candle with a full body closure like this, you expect market to come back into it. Look at this A-shaped key level right here. Let me look at this A-shaped key level right here. So if you miss the entry, at the beginning here, this is your second entry. Look at this A-shaped key level right here. Let me turn on the line chart so that you can see it clearly. You can see this A-shape key level right here. Market did what disrespected it with a full body. You can see they disrespected it, and then they came back straight into that same line, into that same A-shape. And you can see the reaction. They didn't zero drawdown, almost zero drawdown, almost zero drawdown. So it's on the chart. You can always practice it on your own. You will see it. You will see it. I'm just still trying to show you with just 10 pips. You are already in. And then how many RR? 11 RR. You are done. Even though you want to target 5 RR, anything, you are good to go. You can see, you can see it. An A-shaped key level that got disrespected with the candle closure. The same thing that happened here, with the same way we took the buy from the origin of the move, the same way we took a buy. This is like the first entry, and then that the second one is like the second entry. In case you miss it, you can see it the same way. A-shaped key level that got disrespected with the full candle body. You can see this body, this candle right here. Let me zoom in. Let me zoom in. Let me zoom in. Okay, so it got disrespected right here. We broke it, and then we came back into it, and then we continue to what? We use that same key level, we use it to buy, and then the same thing happened right there. We disrespected it, we use it what? To look for more buying opportunities, and the rest of those candles are liquidity. So with that being said, let me get into a full let's get into a full back testing. I will be using another. This is where I have my back testing to the other charts. I can't do the replay 2 on this one. So I will be using this charts for replay. So I've been using Euro USD. I've been using Euro USD as an example all this while. So I want to use a totally different pair for back testing now. Let's use Euro JPY. Let's use Euro JPY so it doesn't then I will be cutting price from any random spot. Like I said, you start your bias on the weekly. If you are trying to trade, this is because when I have as of this recording, it is we are inside of the week, right? So you don't need what's it called? You don't need the weekly time frame because we are in the week. So let's back test and see what we have. Let's back test and see the full example. I hope you've learned a lot. I just hope. So let me cut price from one random replay bar. Let me cut price. Let me cut price to this point. Okay, now we've cut price back. So if I am to trade this particular day, like I said, it is very simple. Your ability to follow simple instruction is all you need. Very simple, very straight forward. Oh, sorry. Okay, it's still there. It's still at the point where I cut the price. I just want to make the screen very big so you can follow through. So what do I want to do? I want to see candle rejection and candle closure on this particular. Are we in the current price? So please let me. Okay, we are still on the current price. We are still on the current price. So what do I want to see? A rejection, daily reject daily, and candle closure. So look at this week right here. All you just want to spot out is your weeks. Where are we rejecting from? Can you see this week right here? Just I know for sure we are rejecting from this A-shaped key level. This is an A-shaped key level. Don't mind my charts. And this is just the chart I use for backtesting. Let me reduce it. Okay. Yes, I hope this is very, very visible. You can see the rejection here, like I said, candle rejection and candle closure. If you turn on the line chart, you can see the A-shaped key level that got, like I said, I told you that A-shaped key level, if you see a key level, A-shape or V-shape that got disrespected, you can see it. We broke this. This is the A-shape key level right here. We are supposed to use it to what? To sell. But what did they do? They broke it with the body here. In this zone, they broke it with the body, with a full candle body. Let me turn on the candle. You can see it. They broke it to the upside. Like I said, you expect market what? To come back into that same key level. And you look for what? More buying opportunities. So if I want to buy, so for on this particular day, what I'm looking for is how to buy. How to buy. That's just what I want to look for buying opportunities. Since they've disrespected my key level at about this zone, again, let me turn on the line chart. You can see the key level right here, A-shaped key level that got disrespected right here. Market what came back into that same key level. What do I want to see? Candle rejection about that key level. The moment they did candle rejection, I already know. You can see they started to buy. They bought here, they sold. But yeah, right. I want to look for more buying opportunities. So the next thing is you move one time frame lower to your 4-hour time frame. You move one time frame lower to a 4-hour time frame. Let me reduce the screen. Like I said, a candle rejection on the daily will give you either a breakout or a liquidity sweep and break on the 4-hour. What do I want to see? This is let's go back to the daily. Let's go back to the daily. I like to annotate and mark. This is our candle rejection right here. This is the key level that we used to build our buyers. So so that I'm clear. Let me delete the one for the key level and leave the rejection. Right. So I want to go one time frame lower to 4-hour. This is where we had a rejection. What do I want to see on 4-hour is what? A breakout or a sweep and break, one of the two. Like I said, this is what you want to see, something like this, or you want to see a breakout, one of these two. So you don't, I've seen my breakout. What we have on this particular day is a breakout. So this is what we have. If you turn on the line chart, you can see the V-shape on that same key level. You can see this V-shape right here. You can see this V-shape right here. So I have a breakout. Then that means I'm what? I want to look for more buying opportunities. I want to look for more buying opportunities. You can see in less than 1 minute, in less than 30 seconds, we'll build the bias just by saying daily reject daily 4-hour breakouts. That's all you want. You've already built a bias. You don't need higher high, you don't need higher low, lower low. All of those things just make everything so complicated. Understand? Like I said, if you're able to follow this strategy, your win rate your win rate go very, very, very high, or at least minimum of 60 to 70%. Of course, you will take losses. This is not an holy grail. You will take losses, but I can tell you this is the simplest way you will ever come across when it comes to trading. Now on this particular day, like I said, I want to look for more buying opportunities. So then the next thing I want to do is, this is my V-shaped key level right there. So I want to look for like I said, you use V-shaped key levels to, this is my breakout. This zone is my breakout. Let's mark it. This is my breakout right here. So I want to buy. So the next thing I want to do is look for a nice, like I said, we use V-shape to look for buying opportunity. So I want to look for my V-shape key level. Where is my V-shape key level? So the thing is, I just go straight back to the daily. I go back again to the daily time frame to look for my V-shape. We rejected it here, and then we created a fresh V-shape key level on this spot. On this guy right here. Let me annotate it and let me zoom in so that you know that they are different. Okay, yeah, I think it's better. Okay, it's better this way. Like I said, we rejected this A-shaped key level, and then we broke it with a body, like I said. And then when we investigated this daily rejection, we eventually have another fresh V-shaped key level. You can see the V-shaped key level right here. It is not magic. It is not magic. This is the V-shaped key level right here. Like I said, V-shape are what? You use V-shaped key levels, you use it to look for buying opportunities. And then you use A-shaped key levels to look for what? Selling opportunities. But if you get disrespected, you expect market to come back into it and then buy, right? So again, let me delete everything for time. For the sake of time, let me delete everything and mark it again. This is our A-shaped key level. We just use this one to build bias. And then when we went to the 4-hour time frame, we saw the breakout. Again, let's go back to the 4-hour because I've adjusted the time I want to take. This is our breakout right here. If you turn on the line chart, you can see this V-shaped breakout. You can see this V-shaped breakout. You can see this V-shaped breakout. That's to tell me that we are what? We are very, very bullish. We are very bullish on this particular day, on this particular. So I'm looking for how do I get in. The next thing is I go back again to the daily time frame, and then what can I find? I can see this V-shaped key level. I can see this V-shaped key level. So the next thing for me to do is what? I mark out this V-shaped key level. Now I shift this my line to this V-shaped key level. I told you V-shaped key levels we use it to buy. Then this becomes what? My liquidity. I use this one as my liquidity. Let me delete. Let me mark my liquidity with this trend line. This candle right here becomes my liquidity. I hope it's very, very simple, very, very easy. I hope it's very, very, but once you go over this video over and over again, it gets so simple. And then what do I want to do? This is, we have different type of entries, risk entry, we have the risk entry, we have our risk entry, we have confirmation entry, continuation entry, and all of those. But on this particular webinar, I'll be using risk entry, aggressive entry. So just for the sake of time, I don't want to go into how to look for confirmation entries, because you can't take confirmation entries because this is the first time. You can't take risk entry rather. You can't take risk entry. It comes with experience and hard work of a lot of studies and all of those things. So this is my liquidity right here. This is my V-shaped key level. I expect market to come back into this V-shaped key level, and then I have my buy. I have my buy around here. I have my buy around here, and let's go back to the 4-hour. Let's go back to the 4-hour. So let me. I want, before I play it, so we can all see. We can all see how the market plays out on that daily key V-shaped key level. So this is it. So now I can play price. So now before we play price, like I said, you need an exit. So since this is my liquidity, right? I will expect market to minimum, they should take out this high, this same candle, we'll call it single candle formation. We take out this high. So my exit will be around here. It is the same candle that I use as liquidity that I will use for exits. The same candle that I use as liquidity. That means once I expect market to sweep this low, they tap into the get me in, and then I will just exit with this same high. So how many RR is this? 7 RR. Let's go back to so then I'll just set my limits, then I play. So let's see. Okay, boom. You can see it. You can see right here we got tabbed in. Let me cut price. You can see we got tabbed in right here. This is where market tabbed us in. Instant rejection. Instant rejection. You can see it. This is where market tabbed us in. We got in on the trade right here. And then what happened? Let me reduce the speed. Let me reduce the speed, and then you can see straight to take profits. Straight to take profits. I hope you've learned something so simple, something so easy. All you need is what? Your key levels. You use your key levels to build your buyers, and then candle rejection, candle closures, buyers. You still use the same key levels to take entries. You use the same key levels to take entries. Because of time, I will not be able to take more examples, but there's a free channel, right? There's a free channel below this video whereby I take market commentaries like this. We trade live week in, week out. I do this any pair of your choice. You can join my market commentaries. It is a coalition. The Telegram channel consists of 3 persons, that is me and 2 other guys. We trade the same way, the same strategy that I've shown you. This is what we use to trade the market, and we are very, very consistently profitable. We take losses, like I said, but we do this every single weekend, majorly weekends and some weekdays, maybe on Wednesdays. We come on live, we analyze the market live with you, and we tell you what to expect going into the new week. We do the market commentary, so you can join us. It is very free. It is totally free. Every week you can join us by click the link below, join the Telegram channel, and then you can always ask more questions on our live commentary. I hope I've been able to impact you. Yeah, thank you. See you on the next one. So you can click the link below to join the Telegram channel. See you on the next one. Thank you.